Hello, it's Adil bringing you a review of the US markets run into market analysis perspective. Okay, so it's the 29th of December 2014, so I wish everybody Happy New Year in advance, just in case I don't make a video. I am travelling to London hopefully tomorrow to teach a few students and meet a few students, so hopefully it's going to be a good year, or ends in a good year, and hopefully I'll continue making videos from 2015 onwards. So if I don't get a chance to say Happy New Year, I'll see it now. And I hope everybody is well, okay, and has had a good, prosperous trading year as well. Okay, so where exactly are we in terms of U.S. markets, and are the U.S. markets floating higher on light volume manipulation as always, and this invisible hand that Miss Yellen seems to wield or yield? Is that what's taking us higher, or is it genuine organic strength? Now we all know the volumes have dipped, and that's the general reason why you always get a Santa rally, because the markets just continue to float higher. So if that's the case, and then that should confirm the markets need to are basically topping out here in and of themselves, and that's a very powerful fundamental argument for the markets to fall, regardless of the markets making new highs. It's all based on lower volume, and there's no conviction, etc., etc. Right. But the other overwhelming concerns, and this is one of the reasons what really baffles me as well with regards to these continuous new highs in US markets, is the fact that we do have genuine fundamental concerns. So, for example, the commodity crisis. Okay, oil's hit a new low at $53. Okay, and that should technically be very negative for the markets, because that's what's caused them to be negative previously, especially for commodity stocks, or commodity related stocks, and obviously a commodity related indexes such as the S&P 500 and the FTSE 100. Those two indexes alone should certainly be feeling the pressure, but that's not the case, with the S&P continue to make new highs even though oil's making a new low at 53. So that's certainly really confusing and baffling from my perspective. Okay, another factor is obviously the Dow Jones and the Dow Transports aren't confirming the new high either. So again, that's certainly confusing and certainly baffling as well. So, but there's a lot of variables there. I mean, semicons and the biotech certainly have been flushed, which I'll explain now from my technical perspective. And that certainly is an early warning sign that everybody wants to get out, and this market is on the verge of a reversal. Okay. Now, what are the overwhelming concerns in terms of fundamentals? First of all, global growth. Okay, global growth concerns. We've got Chinese growth concerns. Just over the weekend, we had some data release out of China. The website was updated with a 3.5% target for growth, and obviously that was removed very quickly. And so again, that's certainly a concern. Then we have a situation with regards to, obviously, like I said, the commodity crisis. Then we've got the Russian ruble, obviously, with its descent, and certain banks in Russia obviously on the verge of getting a bailout, or already have had a bailout, and their GDP number came in today. That was obviously very dire as well. So that's certainly a concern. So you've got Chinese growth concerns, Russian growth concerns, and then you've got a Russian currency crisis and an economic crisis as well brewing as well. So that doesn't bode well at all. And as we all know, economic crisis generally precedes a military crisis. So again, that certainly doesn't bode well, especially with Russia now calling NATO an enemy, and carrying out certain exercises in terms of with their intercontinental ballistic missiles. So that certainly doesn't bode well. Then we have the North Korean situation with the Sony debacle of the new film Interview, and obviously rhetoric back and forth from America, obviously shutting down their internet communications in North Korea, and they are attempting to hit America via cyber terrorism. So there certainly is a lot of geopolitical concerns in the background. Okay, so that doesn't bode well. Okay, and in the fact that obviously we've got the dollar obviously continuing to move higher to a large extent, and that itself is a concern, especially for commodities, and obviously for the costs of financing as well, because that certainly pushes up the yield. Okay, and makes financing, especially emerging markets, are going to be feeling the pinch. Obviously, if the dollar keeps rising, and expectation of interest rates are going to rise because the economic data is supporting that, and obviously that will certainly put emerging markets under pressure, which add in the fact that Russia's already but one part of emerging markets, and the pressure certainly is exerted from there as well already. Okay, and also adding the fact also Mr. Abe. Okay, the elections there. Yes, he's won. All that's priced in now to a large extent. And now we have Greece or Grexit phase. Okay, so Greece is on the verge of a crisis as well. Adding the fact that to Mr. Wiedemann, obviously his comments over the weekend as well with regards to anti-QE, stating that Germany was on track and was in no need of QE at all, and obviously spoke out against sovereign bond purchases. So these are all these overwhelming fundamental concerns that are embedded in the marketplace. Okay, certainly have a bearish slant on the market, or certainly have a bearish bias in the market, and unfortunately doesn't seem to be transpiring at present. So it's a tricky one, okay, from a fundamental perspective. So we know that there certainly are deep fundamental concerns, especially with regards to global growth, and that's why oil prices obviously have continued to make new lows and have made a new low for $53 today. Whether you argue that's good for global growth, yes, it certainly is to a large extent, but if there's no growth in the first place, how can that be good for global growth going forward? So certainly that isn't the case at present, okay? Especially with Russia obviously confirming contracting growth, and China obviously over the weekend as well, although they did wipe that evidence very quickly. Okay, so now let's see where we are, technically speaking then. So now that I've raised and highlighted all the fundamental concerns, let's start with the S&P 500. Okay, so if I go to a daily chart of the S&P, and we start from a weekly chart, anyone, I mean even your cat and your dog will tell you that chart is bullish. Yes, but you need fundamentals confirming that. That's basically how I trade. If the market makes a new high, you can't keep buying the high because you may well have bought the top. How do you confirm it's a high? By the fundamental news flow that goes with it. Okay, and obviously using your intermarket analysis variables that confirm that strength as well. Okay, daily chart, certainly I've been putting in dojis there, so certainly signs of exhaustion, but dojis like this on light volume obviously are not good news. Okay, so that generally tells you that this is a fake out. That's my interpretation of it. Okay, everybody has their own interpretation. Okay, and let's see what I summarize at the end. Okay, so 60-minute chart. Yes, we've broken out of the last previous pivot high there, as you can see. We have left an unfilled gap behind, so that's going to be very interesting. Okay, and realistically, I mean, we have this pattern here that I'm focusing on at the moment. See if we can break this potential channel, and obviously break it to the downside, and obviously fill out these gaps on the 60-minute chart. 10-minute chart certainly looks exhausted now. You have an unfilled gap here. This is going to be interesting to keep an eye out for. It's around the 2080 level, so watch out for 2080. Then you have a gap just below that at 2078, so watch out for that. So 2081 or 82 and 2078, so the two support zones on the way down, so let's watch out for those and keep an eye out for those. Okay, so let's have a look at this here, and so potential rising contracting wedge pattern and on the verge of a break lower, and obviously that's led by oil prices collapsing as well, which means obviously global growth concerns dominate. Okay, again, so there we are. So 10-minute chart certainly indicating resistance, 60-minute chart indicates exhaustion, potential breakdown, obviously this being a fake out given the fact that it's light volume, Christmas, etc. And we'll see exactly how that transpires given the fact that we've had a monster run from 1970 to 2090. I mean, this is just a ridiculous run, and especially with regards to the concerns in the background, like I mentioned. Okay, right, now how do we confirm that weakness? I generally look at the Russell. Okay, so we can look at the Russell 2000 and confirm this weakness or strength. So if I look at the Russell itself, if I go to a daily chart of the Russell, okay, we have broken out. We've broken out of that resistance line, so that certainly is one sign, okay, of bullishness. But when the market leaves behind unfilled gaps, that's generally not a good sign from my perspective, because especially with light volume, that's the argument. You see light volume, Christmas period, etc., and you've left two gaps behind on this breakout. Certainly something to think about. We have this horizontal resistance that we're in now. That resistance has obviously held on a few occasions, and we're slap bang right into that. We also have this gap level resistance here as well, and with slap bang, obviously we've closed that gap level as well. So you have gap level resistance, horizontal resistance. Obviously if that negates and we go higher, then obviously the next level will be 9100. But from my perspective, you have two unfilled gaps based on light volume, so again that in itself attracts you back to that price in terms of price action, horizontal resistance and gap level resistance as well. So again, there's multiple arguments here for the market to reverse and potentially move lower. Okay, let's go to a 60-minute chart now. Okay, we have this bull flag formation, so we're consolidating at pivot R3, and then we have two unfilled gaps, two unfilled gaps left behind. Again, that's not a good sign. Okay, not a good sign. 10-minute chart, we obviously found resistance up here. Okay, so we found resistance up here at the pivot R3, and then we have these two gaps, unfilled gaps below. And given the fact that you've got Russian GDP obviously contracting, Chinese growth contracting, the Nikkei was down overnight, Brexit fears, etc., etc., all those will certainly accumulate to provide a sufficient fundamental news flow to confirm, well, basically close the gaps below. Okay, so that's basically the perspective from the Russell itself. So weakness there in the Russell as well. On the daily chart, you can certainly see that as well. Horizontal resistance, gap level resistance, and the weekly chart certainly. I mean, at present, one can argue that we're still into the horizontal resistance, and we'll see exactly how that transpires. I mean, we did fail this H&S, as you can see, and the markets have obviously rallied back for now, but that's not our concern. 10-minute chart will be something that I'm going to be looking at with a lot of interest. Okay, and again, focus on those gaps below. Now we can look at Russell 3000. Okay, daily chart, we're back at that resistance, horizontal resistance. We have broken out today, but it is a doji, so that's something that I'm going to be focusing on. 60-minute chart, yes, we've definitely broken out here. Again, we'll see if this is a real breakout, if it's a fake out. My concern is that this is on light volume, so it's not exactly very convincing. So that's again something that I'll be focusing on. As you can see here, you've got signs of exhaustion now, and looking for a potential. I mean, no real higher highs here. So again, sign of a potential reversal very soon. Okay, so we've got this here. So you can connect these highs together, and you're basically in that channel, and that channel is on the verge of a breakdown. Okay, so that's something that we're going to be focusing on. Russell 3000, Russell 2000. Okay, that's going to be very interesting going forward. Okay, so that's the S&P. Now let's have a look at the Dow Jones. Dow Jones Index, doji candles again. Like I said before, light volume isn't exactly very convincing. So light volume doji candles, even if you're getting doji candles even with light volume, that exactly isn't an encouraging sign. I mean, it has been one hell of a rally though. I mean, we've negated quite a substantial amount of bearish price action, so certainly you have to give credit for that. 60-minute chart at present certainly indicating a reversal is imminent. A potential H&S formation brewing here as well at top. Okay, failable flag pattern indicating resistance. Again, a 10-minute chart as I've already drawn here, H&S formation, and looking for a potential move south. Okay, so let's have a look at our potential target on the way down. You've got this unfilled gap below around the 17,950 level. Your head is around the 18,100. You've got a neckline around the 1800. So you're looking for a 100-point drop. So you're looking at around the 17,950 level on the way down. Okay, that's basically what we're focusing on. Okay, so certainly signs of exhaustion, no higher highs, so not exactly a bullish pattern. Okay, and that's confirmed with the Dow Transportation Index as well. As you can see, we've not made a new high even with light volume. So what does that tell you? Okay, that's a warning sign. Okay, even with light volume, we've not made a new high. 60-minute chart, we've broken out this bullish channel, so certainly indication of exhaustion, potential reversal there. Obviously intraday double top, that's basically what we've done so far, and as soon as we get the volume increased, then you certainly have a higher probability of this moving lower. Okay, right, so let's have a look at the Nasdaq now, and this is one of the key markets I think everyone needs to focus on. You have this even with light volume, we've not really been able to move higher. As you can see, we've not made a higher high at the S&P, even though with oil price making a new low. So certainly some divergence there, certainly of course for concern. The daily chart, as you can see there, we've left a massive gap behind. That gap is at 4165. Sorry, on the Nasdaq 4165. That's certainly food for thought, okay, for technical traders out there. As you know, all gaps act as magnets and force price action towards it. Now, you have an unfilled gap below it at 4280, and then obviously you've got that gap which I've explained at 4160. So generally, gaps like that generally mean that there's going to be some sort of geopolitical event or socio-economic event that will cause the markets to flush. And as we all know, the Brexit fears certainly have become a reality. So, with 3 votes fading, and now obviously onto the fourth, which is the snap election. Now, we have a symmetrical wedge pattern here on the 10-minute chart. Okay, we have an unfilled gap like I explained at 4280, 200 MAs around the 4300 level. So we'll watch out for that. So watch out for this symmetrical wedge to break on the Nasdaq, certainly indicating weakness, and you've got a potential H&S formation there as well. Okay, and that obviously signifies further weakness, and obviously down we go. No real higher high, and so certainly indicating exhaustion here. Obviously you've got horizontal resistance in this zone here, which is obviously being respected at present. So you've got this horizontal resistance there, so that's certainly being respected for now. And like I said, you've got the H&S symmetrical wedge pattern, potential breakout on the downside looming. Okay. Next we have the semicons, so we're going to look at the semicons to confirm. A 10-minute chart certainly shows you H&S formation very clearly evident. As you can see there, I've already drawn it. Double top confirmation already in. On the 60-minute chart, we've had quite a substantial flush. Okay, daily chart, you've had a topping tail, failed bull flag pattern, and down we go. Okay, now looking at the Biotechs, again Biotechs inside bar. Can you see how all 3 bars based on light volume are all consolidating within this red candlestick? And then you have this classical pattern here of potential H&S. So left shoulder, head. Again, confirm the same H&S on the Nasdaq. So if you get H&S confirmation on multiple indices, and again this indicates further downside attention. So looking for a move down, and obviously you've got an unfilled gap here that needs to be potentially closed. So that's all negative side. Okay, excuse me, it's getting very late, tight. Okay, so that's basically where we find ourselves. Now the other indices which I've been told by Ian Cooling to observe for US markets are the Wilshire Wilshire 5000. Okay, and this itself is bullish. I mean, this certainly can't argue from a daily chart. It's bearish. It's certainly bullish. 60-minute chart certainly indicating exhaustion. Like I said, daily charts I'm not paying much attention to at this present moment until we get some volume. If we get volume and this move is with volume, and then I'd say okay, this is a fake. This is a true breakout. But for now, I'm going, given the fact that there's lack of volume, lack of conviction behind the move, and given the fact that there's overwhelming fundamental concerns, I'm going to attribute this move to a fake out. That's just the way I operate. Obviously, if the news flow changes, then I'll certainly change my tune. But for now, I'm attributing that as a fake out and looking for a potential breakout south. As you can see here, you're in this channel, rising channel, contracting channel, looking for a breakdown, and obviously looking for potential support in this zone here. So looking for a flush on the Wilshire 5000. Okay, from my perspective, it's all about the volume really. I think the theme of this analysis. Okay, and the other one I tend to observe as well is the S&P Europe 350. This is quite an interesting one. Okay, as you can see here, doji candle at fib 75%. So again, indicating resistance and looking for a potential move lower. Okay, so these are all the variables that I generally tend to observe. And overall, my summation really, I mean, the S&P sums it up, is that you have a rising channel that's on the verge of a breakout. 10-minute is obviously putting resistance here with oil confirming breaking below $54. Therefore, it's bearish. The buy certainly remains bearish there. Same thing with regards to the FTSE. I mean, you can see the FTSE itself is into resistance now on the daily chart. Clearly shows that previous support equal resistance, and the S&P 350 generally is the one that's best observed, and that's slamming into the 200 MA. So therefore, that's indicating resistance. Therefore, down we go. Okay, and that itself would confirm the weakness. So the S&P 350 is into resistance. UK markets into resistance. Brexit fears, global growth concerns. Light volume has been moving the markets higher, so therefore it's a fake move, etc., etc. The whole summation really at this very moment in time is, I mean, just keep looking at Dow Transportation. I mean, that should itself confirm that even with light volume and we've failed to really make a new high, and that itself is a warning sign. Okay, so I think my summation here is that we are in a risk off phase, and I expect the markets to certainly start to move south very, very soon. Okay, so risk on.